the global news. Now we're going to go to Efosa Aluyi, who is the head of global investments at Sankore. Efosa, good morning to you. Thank you so much for being with us. I want to kick off with US CPI decelerating to 3% year on year in June. What do you make of the numbers that we're seeing from the US and then the market reaction?
Morning, Rotus, and thanks for having me. I think the deceleration essentially just reflects the aggressive monetary policy stance that the U.S. Fed has taken up over the last 1 year. We've seen the most aggressive monetary policy stance in about 40 years. So that deceleration is a reflection of what the Fed has been doing for the last 1 year. And I think that the market reaction was, pretty much well within what we really expected. Right now, inflation is just 100 basis points touch of, the Fed's 2% target. So clearly, a lot of progress has been made over the last 1 year to really bring, that inflation number down. And the expectation then is that the Fed would essentially kind of have to, take its foot off of that, tightening pedal. Although the market still expects that the Fed will tighten at its meeting on the 26th of this month. But we are beginning to see that there might be expectations that, after this final hike, the Fed would essentially come to the end of its hiking cycle, seen as inflation has come off quite significantly. Recall that, we had a peak inflation in October of last year at 9.1%. So that inflation number has actually more than halved and created even more impetus for the Fed to take its foot off the gas.
All right, Brent crude rising to $80 a barrel for the first time since May. I mean, for us in Nigeria, where our downstream sector has been decelerated, I'm wondering how we should feel about that. But what do you make of that for, I guess, the international oil markets?
Well, I mean, I think that's on the back of, some of the data that came out of China. We saw that, local consumption in China increased quite significantly year on year and even month on month. So all of that is also, providing some momentary strength to crude prices. However, if you look at the market fundamentals, the fact that, the Saudis have continued to take output off of the market has essentially provided a floor, if you will, for prices. So we think that crude prices will remain sturdy, going forward, particularly because we are seeing, some sort of strength in terms of consumption, particularly for crude oil within the Chinese economy.
And speaking of oil, Norway's government approving $18 billion worth of oil and gas projects. The environmentalists are frowning on that. Well, what do you make of that development there?
Well, I think it's a culmination of, certain tax incentives that were passed in 2020, the wake of the COVID-19 pandemic, really. If you look at the oil industry, we've had years of significant underinvestment across board, and that's really largely been sponsored by the whole energy transition wave. But I think that for Norway, it is a strategic move to essentially pick up the slack, particularly to ensure that, energy security for Europe is sort of guaranteed. In the wake of the, Russian invasion of Ukraine, we've seen Norway then become the largest gas supplier to all of Europe through the Baltic, pipeline. All the issues we had with all of the Nord Stream gas supply from Russia was well documented. So obviously, with the shifting geopolitics, I think Norway is essentially trying to ensure that it does take advantage of, its ability to become the major supplier of energy across Europe. The truth of the matter is that, from an environmental standpoint, it doesn't exactly look great, but that energy transition, still going to take some time, and will certainly work side by side, even with continued usage of fossil fuels.
I heard you mention China earlier, I think when we were talking either CPI or oil, but what do you make of the latest trade data coming out of China, the contraction, I guess, in exports and imports for June?
I mean, what it just tells is China just increasingly needs to look inward, right? The export-led turbocharged growth that we've seen in China it seems that era seems to be waning as it is right now. So growth that is induced or sponsored from homegrown consumption has to be the way to go. Again, what this just emphasizes is that the government or the authorities need to do better when it comes to stimulating the economy. Just coming off of the COVID-19, debilitating COVID-19 lockdowns, the economy really has failed to take off as expected. So clearly, a lot of stimulus measures, both monetary and fiscal, with particular focus on the real estate market. That market is still flagging. It accounts for about a quarter of the country's GDP. So a lot more support needs to go in there to ensure that the flagging economy is significantly supported and homegrown consumption is basically reflected in the Chinese economy.
Thanks for that. Let's hop across the pond from Asia to Europe. United Kingdom, we got the UK GDP contracting in May, though not as bad as forecast, 0.1% versus 0.3%. How do we interpret that?
I mean, it really isn't unexpected, right? With the sort of tightening that we're seeing the BOE implement. If you look at the US Fed, it's pretty much close to the end, or pretty much at the end of its hiking cycle. The BOE still has some ways to go. Inflation is still a bit of a problem in the UK. Also, you're looking at the fact that the tightening is then obviously stoking significant concerns in the mortgage market, where mortgage payments are going to rise quite significantly. Also, all of these have very strong implications for the broader economy. So that contraction really isn't unexpected. And going forward, we actually expect that growth, on the back of, the aggressive monetary policy, would remain tepid in the UK.
All right, finally, Elon Musk, I think, is launching XAI to challenge ChatGPT. The Financial Times reporting that Mark Zuckerberg, or rather Meta, is pursuing a commercial artificial intelligence. What do you make of the AI race with where things are now?
I mean, it feels like everybody wants a piece of the pie, right? This feels like the shiny new thing that's out there. And clearly, everyone that has the muscle, have got the scale, is trying to get in on the party, really. And that's very, very understandable. And that's what we're seeing with Elon Musk essentially throwing his heart into the ring. We're also seeing, Meta, launching a version that would essentially compete very formidably with ChatGPT. Clearly, that space is going to become really crowded. There's going to be a lot of interesting things that go on there. However, I think it's very healthy and will certainly shape up how generative AI basically shapes the future for us, really. So really interesting times. Remains to be seen how things pan out there.
All right, first, before I let you go, there's supposed to be a cage match between Elon Musk and Mark Zuckerberg. Who do you think will win that cage match?
I'm not much of a betting guy, but I don't know. We'll see how that goes.
See how it turns out.
It's all for the entertainment, really, at the end of the day, right?
Efosa Aluyi, head of global investments at Sankore. Thank you so much for joining us. Appreciate your time. You're watching.